Good morning, traders. Welcome to the Flow Show. Here we go. A big old week for central banks. We've got a ton of them coming through, which we'll look at shortly. It's a very busy one, and a few bits and pieces of data to get through this week as well. Now we've got the tariff can kick. Maybe we can get back to trading the fundamentals a bit more. Right, before we kick off, just want to bring you some updates of some things going on in Forex analytics land. Just some of the other offers and services we provide for traders. First up, just going to show you that our trader funding program. For those that may not know, we did do assessment accounts, but now we've added immediate live trading accounts. This basically means you can purchase an account and you instantly start trading that amount of money. Okay, there's no assessment process to go through. You get that amount in an account ready to trade, ready to go. Okay, so it's another form of being able to scale up your trading account, but rather than going through an assessment, which I would advise because it teaches you good discipline. But if you did want to jump straight into a larger account, all the same things apply in terms of losses. There's obviously drawdown rules as well, so take consideration of those. But it's, as I say, it's just a quicker step to get you trading a larger account if you want. As I say, you should maybe try an assessment first just to go through all the disciplinary procedures, make sure that you are suitable for such an account. I'll put the link up there in our chat for you if you want to have a look at that in more detail. We do run accounts. They don't run as big as the assessment accounts. Those accounts you can get up to $1 million, but you can trade up to 100,000 in these accounts here. So check that out. And one other thing we've got for you as well is our coaching program. I know a lot of you have taken part in this already, and I know for sure that it's helped a lot of traders along the way as well. But if you want to take a look at that as well, we've got all our coaches there. They're fine. A fine roster of people in there, and I'm even in there as well, just to make up the numbers. But yeah, if you want to check that out as well, please do so. I'll put that link in the chat room as well, or in the chat here on Zoom. Let's just do that quickly. And that's the link there. So, as with all things, we've got a discount running on those there, 40% off your first session if you decide to take a session there. For example, if you did want to book my good self, you can get 40% off your first hour session there. And then there's various discounts if you want to take packages thereafter, but all the coaches there. Now, you also, going back to the trader funding program, you do get access, depending on the type of account you take, to Forex analytics for a certain period as well. So we like to make sure that if you're a new trader and you want to take one of these accounts, that you get the best help you can by getting you into our chat room so you can ask any questions. And we do have a dedicated trader funding program chat room there for the people who use that. So check that all out. We help you get you on your way to trading more profitably. Right, let's get stuck into what's going on and going on in the world, as I'm sure you like to know. Let's start off in China with a bit of data. The first thing this morning, if I'm in the right bit, that is. No, where am I? Need to go. Yeah, here we go. Let's go do a bit of zooming, a bit of scrolling. There we go. Industrial production, and these are mostly year-on-year numbers. That was up a healthy 5.9%, a bit lower than last month, but beating expectations 5.3%. Retail sales as well, beating expectations 4% year-on-year, although year-to-date sales came in a little bit softer than last month. There was some good numbers as well for fixed asset investment. However, as you can probably expect, property investment year to date wasn't the greatest. It doesn't show it on this calendar, but it was down 9.8%. I was expecting only fall 8.5%. Sales, residential property sales year to date was down 0.4% too, and home prices fell at a faster pace than they did last month. So bit of an improvement in some of the data, but in the property sector, much beleaguered property sector, nothing going on there that gets the market excited, and that will probably get them doing more fiscal measures and rate easing measures along the line. Coming over to Europe, Hawke Holtzman said on Friday that higher European spending could force the ECB to hike. He mentioned the H word, hike. Sorry, indeed, I forgot to shut me squawk up. So let's get that closed down. Yeah, so he's mentioned the hike word. He says he supports pausing rate cuts next month, April, and sees inflation. Sorry, let me get that straight now. He supports pausing rate cuts next month in favour of seeing inflation potentially coming higher on the back of that EC or European spending. He says that there's a risk interest rates are already at neutral levels, which we know they're right in at the moment. ECB's Escriva says policy is far less restrictive now, and says April's decision is unclear, but we must keep our options open. The silent assassin, ECB's De Guindos, says Trump is destabilising the economy worse than COVID. Big comments there from the VP at the ECB. He says that fears over what the US will do are hurting investment and consumer confidence, sounding like he's getting a load of excuses out as to why European economy may not perform as they would like. Over to the politics already. We had all this German stuff going on last week. So the German Green Party apparently finally reached an agreement on this debt deal. That was the bum fight that we had all last week. And they are now satisfied, apparently. But Handelsblatt reported this morning that it still may not be a clear vote through. The SPD, SDP, I can't remember which way around it is, and CDU will need potentially all the votes from the Green Party, 31 of them from the Green Party. But apparently Handelsblatt reporting that the head of the Greens Party are a bit worried that they won't get all their MPs voting for it. So that may be a little bit of a spanner in the works for this bill that's being put through. On the other side, we had the AfD throwing their spanners at it, getting a case into Germany's constitutional court. That court rejected their case late on Friday or Friday afternoon. But now, apparently, the court has received more complaints against this debt vote plan. And this is coming from other smaller parties and independents. So we're not done with all that yet. I think the vote is set to go through tomorrow on the whole thing. So there's going to be a lot of 11th hour shenanigans, no doubt. Meanwhile, all this fiscal magic money tree money is not boosting forecasts for the German economy. The IFO Institute being the next to lower their forecast for economic growth. 2025 GDP now cut to 0.2% from 0.4% in their last report, and 2026 has been cut to 0.8% from 1.1%. Now the IFO have an index that they bring out, a data point that they bring out. As you know, we get the zoo and we get the IFO. Those are the two data points where we could see firms' reaction to this fiscal spending. They are sentiment reports taken of their members, so we get to hear whether they see these fiscal moves as going to be a big boost to the economy. So those numbers we need to watch out for. Speaking of sentiment, we had a pretty crappy Michigan number on Friday. Consumer Sentiment dropping. This is the flash numbers for March to 57.9 from 64.7. A big drop there. Current conditions also falling 63.5. Expectations falling 54.2. Was expected to go up. So not good numbers there. Also, look at this. Whopping great jumps in the inflation expectation metrics, 4.9 and 3.9. Now, I know a lot of people are making a political football out of this, saying that there's different answers given by Republicans and Democrats. Okay, and I've been over this in our chat room. Okay, I don't buy it. There's always going to be people who have political affiliations, and yes, they may answer questions. But the question on their political affiliations comes pretty much last in the survey. So they've already given their answers, irrespective of what they think politically. People are answering based on what they think at the time. And also, it doesn't really matter if people think that their money's not going as far as it used to be, then they're going to reply as such. Okay, so this political football business around this data point has never been brought up, as far as I know, in the history of me, at least, watching these numbers. It's sentiment. Okay, sentiment is sentiment, whether it's good, bad, ugly, or whatever. Okay, the market moved on it. That's all we've got to worry about. So forget the political ramifications. Plus, there's no split, so we don't know if out of the 500 people surveyed, 499 of those were Democrat and 1 was Republican. So there's a whole load of other guff in there that we don't know. So take it for what it is. It's a soggy report. If we see these sentiment reports playing out in the hard data, and we'll get that today, then that will tell you whether these reports are valid or not. Anyway, all of those were crappy numbers, worst possible case numbers for the Fed. Lower consumer expectations, higher inflation expectations. For now, the Fed is more concerned about firms and market interpretations of inflation expectations more than the consumer. But these numbers may rear their head at the FOMC meeting, of which we have this week, of course. So don't ignore it. Just build it in to whatever's going on in some of the hard data. Anyway, moving on. Secretary of State Rubio said US tariffs are not meant as hostile moves. He says that the tariffs work to reset the trade baseline, and from that point, the US can engage in bilateral negotiations for fair long-term trade arrangements. The US Senate voted to pass the Republican bill to avert the government shutdown last week. That vote passed 62 to 38, so the can is flying through the air. That's till September, I believe. New Canada PM Carney says he will have election news in the coming days, because obviously that's the next step after he became PM. He says Canada has made progress with Trump and says a solution will be found, or solutions will be found. Talking about a lot of stuff, tariffs among them. Over to the Ukraine-Russia stuff. Zelensky says that the Ukraine needs 100% air defense cover as a deterrent in any peace deal. So more conditions being put forward by Ukraine. Trump announced he will speak with Putin tomorrow, and he may have an announcement on Ukraine-Russia talks by Tuesday. So keep an eye on risk trades for that one if we get a sudden announcement that there has been a ceasefire or they're working towards a deal. Trump says that land and power plants are the focus of talks towards a deal, and they're already discussing dividing up certain assets between both sides, whatever that may mean. But we're still walking towards a potential solution in Ukraine, Russia, and that will be good news if that can be effected, of course. That's about it on the old headline front. Major stuff anyway. So let's have a look at what's coming up this week. Quite a busy day today, particularly in the US. So that's going to be kicking off in just over an hour, because obviously the clocks are still on. The US clocks are still changed. Everything's an hour earlier for us. So these are UK times, London times at the moment. Retail sales, that's going to be potentially the biggest data point this week. Obviously, we got the Fed on Wednesday. So this is going to be a bit of a doozy, because if we get a soggy number, another soggy number here, then that's going to not be good for a market that is already seeing negativity in the economy. It's not quite there in terms of overall negativity, but the market is at the moment taking a bit of a worried tone for the US. Retail sales are expected to rise 0.6% following that negative 0.9% last month. Okay, so the market is looking for a pickup in retail sales, a small pickup in the core retail sales number of 0.3% versus minus 0.8 previously. So anything positive that will perhaps ease the market a little bit, and probably won't get much change in expectations for the Fed on Wednesday. But if it is another bad one, that's what the market is looking for in all data points at the moment, then we're probably going to see another reaction in the dollar, further weakening, yields coming down perhaps, and euro, dollar and all the rest shooting up again. Will that push the Fed closer towards a cut? Probably not. They're probably going to pause on Wednesday as expected, but it will be the tone that Powell takes in terms of what he sees as the cut path thereafter. If they are worried about some economic weakness, it might indicate a cut might come sooner, or that more cuts come. It is a projections meeting, so we get the dots and everything else coming into that. Largely, no one's really expecting any big change. 2 cuts this year. We'll probably see the dots just shifting around subtly. I don't think we see any big wholesale shifts. But again, it would just indicate probably a calendar trade more than anything. As we've been talking about, what the market is really set on about 2 cuts, sometimes edging towards 3, but it's really whether they're coming in June, July, September, December, or whatever. So just trading around the calendar. But anyway, that retail sales data is going to be a big one. We also get Empire State Manufacturing. It's been a bit of a wild one of late. We're expecting another dip back into the negative, minus 2.0 from 5.7 in the last month. Tuesday, we get CPI data out of Canada. So it's something for loony traders. Again, the market a bit bored with all these tariff headlines until we get closer to that deadline. So we get a chance to trade the fundamentals there. Then we get some housing data out as well, starts and permits from the US, industrial production later on in the US as well. Wednesday, we kick off the old central banks with the Bank of Japan meeting. And we'll talk about this nearer the time, or we'll talk about it tomorrow, but largely expected to stay unchanged. Get Eurozone CPI numbers there. So keep an eye on that one as well. Then we get the Fed later on. Thursday, jobs data in Australia, and that will play into RBA thinking, of course. UK jobs report for what that's worth. That comes on Thursday as well. Then we get the SMB dropping as well. Rates expected to be cut 25 pips to 0.25%. Inflation been a bit soft over there still. Could this be one of the majors to get rates back to zero? It's a pretty low bar. They never got inflation as high as everyone else, and they never got rates as high as everyone else. But that, if they do cut, that will put them 25 pips away from the zero line. And they have not taken negative rates out there to tall box either. We also have the Riksbank. Thursday morning, they're expected to stay unchanged at 2.25%. And we have the Bank of England as well. Again, they're expected to stay unchanged, but we're going to be looking at the vote patterns to see whether anyone's jumping around. People like Green and Mann, who voted for that 50 at the last 50 cut, the last meeting, one of the big hawks. I don't know what she's going to do this meeting, but it could be a fun one. Then we get the Philly Fed, jobless claims and whatnot out from the US later on. Some more home sales data, existing home sales. And Banxico is also out on Thursday as well, expected to cut another 50 basis points down to 9%. Then Friday, bit of a quiet one, except for UK public finances, which will be perhaps a bit of a market mover, because next week we get the spring budget update thing from Rachel Reeves. So that will play into that as to how much potential room she's got to manoeuvre. And then Canada retail sales. But other than that, pretty quiet Friday to see us out for the week. Oh, a busy one. It's going to be a busy one this week. I'm glad I'm on my own this week. Right, get a shot of that. So let's have a look what's coming up or what's going on in prices at the moment. Euro dollar. And I put a bit of analysis in our chat room. We're still trying to resolve this 108, 30, 70 zone. But I just want to highlight, this is why I've got this zone. We get reaction around it when we're in it. This is 2 weeks now we've been messing around with this zone, trying to make a decision whether we're going to break up, break down, or whatever. Okay, so it's late last week, we held the bottom of it, 30s. Now we're holding the top of it. Okay, don't ask me why these two numbers have such a say in things. That's what it does. The market does strange things like that sometimes. And this is what it's doing. So we're still waiting to see whether we're going to break up. While we're staying on the top, while we're staying above here, staying on the top here, then it keeps the bullish momentum. But we have been struggling to rally. We haven't got up to that 109.40 area. But on the same way, when we break down, we struggle to really push lower. So what's becoming obvious to me is that we've got, or we can take these two key levels pretty much between here and here. Okay, so 108's 108's 40. Okay, this will be, these two levels will be the decider for what happens at this zone. Okay, at the moment we're looking pretty bullish, but it needs to get above 109.40. Okay, if we look like we're going to start doing that, then you've potentially got a situation where you can rely on buying dips down into some of these low areas. Okay, and then looking for that big move higher. Obviously you've got to be careful because we've got plenty of levels just above. Let's just get rid of that. So, you know, we've got some old levels that we're still dealing with. 109.60 just above, 110 just above that. So some decent levels. So I'm not saying if we break 109.40 we're going to 115 or anything like that, but it just might turn this a bit more bullish, keep this rally going. Okay, so if you're looking for longs, just look for reasons. We've already got a hold here at 70. We need to get above that 109.40. Do that. This area is going to probably solidify as support. Okay, so if you want to be looking where to get long, wait for that moment. Obviously, if you just want to job it around off this 70 level, off the 30 level, go right ahead. So I'm not expecting rockets if this goes. We may get a bit of a pop if we get confirmation from Germany that this fiscal stuff has finally passed and gone through, but you'll have to wait and see whether any rally like that stays in the price or whether it's just a quick spike and then we revert back again. But for now, we're still waiting to resolve this area, but it's still looking constructive for the upside. Dollar yen, this one's going to be interesting, obviously, with the Bank of Japan this week. We had that 147 hold. We still haven't yet broken this downtrend or come close to looking like we're breaking this downtrend. We won't start doing that unless we're up at this 38.2, 151.25, testing this area here. If we're doing that, then we might break the trend. As I said, not really any expectations for any change at the Bank of Japan, but their updates on how they see the economy, maybe how they see these wage deals coming through, will be important for them to highlight when they may hike next. They do have a pretty quick meeting, only 6 weeks after this meeting. We'd get one in April, so that will take them through all the wage negotiation deals. We'll know exactly what we're getting from those, and it will take us over the fiscal year end. So all the big whales and whatnot would have done their investment plans. So it may just be a bit of a clearer landscape for the BOJ to decide whether they want to hike again. So potentially we could see some upside if on a confirmation of unchanged and that they're still waiting. But if they say they're getting closer to another hike, we could see a reaction, and that 147 level is going to be important. If we test that on a hawkish sounding BOJ but we can't break it, that's going to suggest we've got a bit more of a bottom coming in around that area, 147, 146.50. Aussie Kiwi, Paul, I'll look at Euro Kiwi in a moment. You know me, I don't love head and shoulders, except when I'm in the shower. But I'll have a look at that. Aussie Kiwi's having a bit of a breakdown, finally. We were sitting in this 2-week range here between 110 and 110.30. It finally decided to resolve to the downside, lucky for me and my shorts. So I've taken a little bit off again this morning. We have been turning around this old 50 fib here, 109.80s. It's been a bit of a level previously, bit of a minor one where we've had a bit of action around there. Haven't managed to stay below it for too long. We might do so this time. We'll have to wait and see. Immediately, this 110 is going to be needing to watch to see if we get resistance coming in there now. Haven't had a real test there, though. You know, we had a weak pop above 07s, 06s, but we're down below. So that's really going to be the test point. But if we start to see a hold under 109.80, that should indicate that there's further downside, and then we'll get down to test the 61.8 maybe in this 109.45.50 area down here. My plan is to hold out for a move down to the big old magnet at 108 that we've been down. This price has been down plenty of times before. It's revolved around this area so many times over the last few years, okay, while standing this wider range here. So I'm looking for a move down there, but I've been shorting this one, taking profit, adding back, taking profit all the way through. So I think if we do confirm a hold down here and I get that 109.50 area down here, I think I'm going to start pulling all my stops down, because I've kept my stops above this 112 area all the way through this. But I don't want to see another rally up there because that might indicate we're going to break. So I want to lock it in, and if I get trailed out, then I can just take the trade again as a fresh trade rather than keeping a core position. But this one doesn't move very fast. So I've got plenty of time to make decisions. It's the Antipodean Euro Sterling. Right, Euro Kiwi. I don't even know if I've still... Oh, there we go. I've got it in my chart. I'm not hopeful that I've got much tech on there. Paul? No, none at all. Let's have a little look and see what's going on. No. So you're probably looking at a short-term head and shoulders then, I assume. Something around there. Let's get my little pencil out. You're probably looking at something like that, mate. Don't know. Looks a bit of a wonky one for me. I like my tech nice and clear. Or you're looking at, is that the one, Paul? Yeah, that's the one. I don't even know where you draw the neckline on that. This one, somewhere through there, perhaps. I don't know. It all looks a bit wonky for me, mate. So let me get rid of all that stuff and let's have a look at what I think about it. Well, it's already looking like it's breaking down through this 189, 88, 70 area. So you've got a bit of a breakthrough there first and foremost. So irrespective of head and shoulders and whatnot, you've got a bit of a break and it's holding the break. So if you're looking for the short side, and let me know what you are doing. I'll assume you're looking at the short side. If you're short already, then it's going your way. And you're under and holding this area. So you've got every chance of seeing it coming a bit lower. Fibs, we've probably got a bit of a way to go before we get to the 38.2. Yeah, so that's not down till 187, which is a bit of a level on its own as well. So if you're looking for that one, that's the level that you're going to want to see breaking again if you're short and seeing further. But if you can't get below that low or that fib, you might find that this trend is not for breaking just yet. Then a bounce off there, we'll see it maybe pushing back up again. Lucas, Euro Swissy. Of course, I can look at that for you, sir. Let's come a bit wider. Make sure all the levels are tightened up. So we got up to that 61.8. We had a little nosy on through, but we've held it pretty much. This one, it's still keeping the rally. Okay, so we're still making higher highs. We got 2 on the go there. We got 3 on the go there. We got 2 thus far underneath. So it's still holding on to these gains, and probably will do while we've still got this bid in the euro. This one, depending on what's going on in the euro and generally, keep an eye on this obviously for the S&P coming up, because if the S&P give anything that's undovish and you see the Swissy gaining a bit, that might be a bit of an opportunity if the euro is strong everywhere else across the board. And again, amazing how these fib levels, retracement levels can turn into levels all on their own. 95, 65, 60, 65 is a level, as you can see, had a bit of action. So that's already been a support point. So, if you're breaking under there, maybe something is changing, probably on the euro side more than the Swiss side. And then longs are going to look a bit dodgy because then you start to break that series of higher lows. Otherwise, the range, pretty much 100 pip range, 96.5, 95.5, 96.5. Take your cues if you're breaking either side of that. Above, you've got this next level coming in towards 97 figure, 97.87. Daresh, of course I can look at gold, my friend. I managed to lose money on this one last week because I hit it for a big figure scalp, and then I chickened out of it when we were trading up. Obviously, pretty much stopped myself out at just above the highs. Well, 02, 01, 02, I can't remember. I got out for a couple of bucks loss just before it collapsed all the way back down to 80s. This is a level I highlighted last week when we made that move, that we were just building a bit of support, and it's further developed. We've now got 2.5 days of the market holding this 29.80. Okay, so this is your level. If we're breaking back under there, then we're probably heading lower, probably back down towards the break point 29.50s, and I would suspect there's going to be a ton of buyers lining up there already. As for where we go from here, we're just deciding whether we want to get back into 3,000 or not. Again, I think you just want to see the price holding. Okay, if you get it back above 3K, you just want to see it holding. Let's see if I can. Oh, no. You know what I mean? 3K. That's the number there. So if we're getting back above there and we're holding it, then we're going to push on. We couldn't hold this break. Look like we're off to the races. So we're going to have another go here. Wait to see if you get a confirmation move where 3,000 is becoming support. To get that, then we're going to be shooting higher. Brand. So is the UK still being held up by the euro? No, the pound isn't being held up by the euro. The euro is looking a bit stronger than the pound at the moment. Doesn't mean the pound is looking weak. Cable is doing a similar thing. It's holding support, holding prior break areas. It's holding this 29.20s area, which is sort of looking like the 108.70 in euro dollar. But we need to get through these highs. 130 is obviously the main number here. It's been a bit of a level. I wouldn't call it the most massive level in the world, but it's a big round number, 130. So, there's going to have some psychological impact there. I did fancy maybe giving it a go for a big figure test last week. We didn't quite get up there. I'm not going to be too sure about doing that a second time because the dips have been shallow. And if we get another rally up here, might be driven by a bit of news. We might be going through it. So I would have liked on the first test. We had half a test last week. Don't know if I'll try a little scalp short if we get close to it second time around. But I'll keep an eye on it. We do have these previously. We had these secondary breaks through the level up towards the 40-50 area. So that would be an area you need it to break above there to cement a 130 break on that one. But same thing, below 129.20, 129, things might be looking a little bit shoddy, but really need to get under 28.48 under there. We might be heading a bit further back to the 128s. Euro sterling, that's still staying up here. Okay, it did look like we were breaking back down again, but that didn't last. And we back up into the zone. Now we're just having a little bit messing around within the zone. Not as clear as we get in euro dollar. This is more of a shorter term zone area than some of the others. The 84, 80, 85 is the big historical one. That's your 108, 30, 70 euro dollar. But we're still keeping the gains here. I did have a little bit of an inkling to maybe start getting into some shorts, but I'm glad I held off now because we had that break up through the zone. I'd still look towards this area as to maybe putting on some shorts, but we got obviously this stuff going on in Europe with all the fiscal spending. We've got the BOE this week, and we got Reeves and a fiscal spring update next week. So that's potentially going to be a bit of a mover for the quid. And on balance, I don't see any good news coming out of that next week in terms of what the market may read into it. So I'm setting my expectations for some disappointment for next week. So that, again, could see this higher, maybe pushing up to that 85 zone at the very least. We'll obviously talk about the Reeve stuff next week, but I'm getting a feeling it could be a mini Liz Truss moment in terms of the market making a judgment over her ability to control the country's finances and get the economy moving. So we'll have to see. It's all going to be about whether the market likes it or doesn't like what she's selling next week. And but I'm not getting. I'm not feeling too positive about it. So I'm not going to be trying to get long the pound anytime soon ahead of that. Right, anything else? A quick look at the old dollar MEX. That's had the break through this 20 zone, so we need to keep an eye on that now. We haven't really had a test yet, but one might be coming. We're just turning around this 38.2 fib, as you can see. We had a break below. Looked like it was trying to hold below, but now we're just holding that area as support again. So it might give us the impetus to have a little test higher. This one, again, is on the clock, ticking down to that next set of tariff deadlines. We're obviously going to get comments coming out in between, but I think the market is pretty bored trading those headlines until it gets closer to that. And obviously Banxico this week as well. But otherwise, yeah, while we're below 20, it gives us every chance to head lower, maybe down to 1975, maybe even the 60s. But I'm not expecting this one to fall out of bed to go massively lower. So I'm all locked in now in my shorts anyway. It's been a fairly decent trade. Right, anything else, boys and girls? Or we might call that an early one this week. I will have a quick look at yields. Because obviously this could be a bit of a moment for the Fed coming up. Forget the moving averages. As you know, we don't do tick on yields. If the Fed are going to be sounding a little bit more dovish, then we could be back under 420 moving down, and that's obviously going to drag the dollar with it. I still think any rallies in yields probably get hit as well, because even if the Fed stand pat and don't change their message, the market might just react to that. But I don't think we're giving up this economy's potentially in trouble sentiment that the market's got at the moment. So any rallies in yields, which will be selling in price, might find a few dip buys coming in and pushing it the other way. Anyway, that's that for today. Nice, easy one to get us started into the week. Have a great week, everybody. I'll catch you all on Face in a bit. So take care. See you tomorrow.